After spending countless hours looking over listings and crunching numbers, applying for a loan, and finally getting approved, congratulations. You finally found the perfect place to buy a house and start your real estate investing journey. But I noticed something weird. A lot of veterans and people on active duty are making the same rookie mistakes when buying a home. These mistakes might be harmless early on, but it would cost you over time. That's why today I'm sharing the top 8 pitfalls every service member must avoid when buying a new home. What's up, Wealth Warriors? It's Josh here. If this is your first time here on my channel, my name is Josh Villarreal and I create videos like this to make real estate investing simpler. I'm just a regular guy who started multiple businesses and failed a lot, but I was able to create real wealth by owning dozens of units, and now I'm currently developing 49 more worth $20 million in San Diego. Now, let's start off with number 1 of the 8 pitfalls: overlooking the VA loan benefits. VA offers a plethora of benefits for the military, and this includes the benefits of VA loans. You may not know it, but VA has benefits such as no down payment requirement and lower interest rates. Not utilizing these benefits could result in higher costs over time. Now, I made a video solely dedicated to talking about that. If you want to learn more, click the link below. As for number 2, it's skipping the pre-approval. Remember that one time you wanted to buy something out of the store and it turns out you don't have enough money or cash with you the whole time? It's embarrassing. This is the same thing. Never start looking for a home until you've been pre-approved. This is serious, guys. No matter how well you're qualified you are, until you have a pre-approval, not a pre-qualification, don't make any choices yet. This is your ticket to buying a home. It uses your actual income, actual credit, and saving account balances to tell you whether your mortgage could be approved or not. It's the first thing that you should consider when buying a property. Also, sellers love that you have a pre-approval, and especially nowadays when it's very competitive, you will need a pre-approval letter. Number 3, it's letting your lender max your payment. So congratulations, you're about to get pre-approved, but be careful here. Check the numbers as always. Did you make sure you could afford the principal amount on the monthly basis, considering your other expenses? Don't let your lender max out your monthly payments. Just tell them how much you're comfortable paying for your home each month. The thing is with the lenders, they treat your approval as a pass-fail, and they'll always give you an upper boundary limit. Don't be tempted with these lenders' strategy and stretch out your budget too thin. When the time comes that you may or may not be able to afford your monthly dues, it'll be out of their concern. So it's up to you to start with a payment in mind and one that you are comfortable with. Ask your lender to pre-approve you for that amount so you can commit to staying on budget. And this is also common when tempted to put higher offers with competition. You need to make sure the numbers make sense, especially when you want a house hack or turn this into a rental. Number 4, it's ignoring additional costs. Just because we talked about the mortgage payment you're comfortable with, let's not forget to mention all the additional costs. This is why it's important to just take in a surmountable amount. Homeownership comes with additional costs beyond the mortgage payment, such as property taxes, homeowners insurance, maintenance, utilities, property management, and a couple other random things. You may be struggling to keep up with the expenses if you fail to include these things in your budget. Number 5, it's letting your pre-approval expire. We have mentioned that pre-approvals use your income, your credit score, your savings account, and current mortgage rate to tell you how much you can afford to buy. But keep in mind that those numbers move. Your credit score, your income, and money in the bank, it changes all the time. Don't let your mortgage pre-approval expire out of neglect. It doesn't last forever, and you'll have to renew every 60 to 90 days. Renewals may be more common, especially for those facing frequent relocations or deployments. Mortgage rates will change, which affects payments. It could drive your principal amount up or down. Keeping up with your pre-approval won't surprise you for those changes. Number 6, it's hiding important information. Military culture may conflict with your rationale about telling information, but you have to, especially from the lender who needs it. Brothers, you'll be asked about your job, sources of income, your residential history, citizenship, and all kinds of information. You may be asked whether you're making payments to maintenance, child support, or even whether you're a party to a lawsuit, and a lot more questions that you may have not expected to hear. Whichever it is, answer honestly. The information you provide will fill in your mortgage pre-approvals. Everything will be taken into consideration to get you the best possible purchasing power, which investors like me love, because investors love great leverage. Remember, Remember, it's the lender's job to lend. They will help you buy, but they don't want to be lied to. Everything you're asked will be verified later independently. And if it's found that you withheld key information, you may face worse consequences later on, such as losing your loan and hopefully not together with your deposit too. Always be truthful. Everyone wants to help. Number 7, it's skipping the home inspection. You're looking for the perfect house. You filter it down accordingly to the specifics and you think this is the one. Yes, it's for you and it's the best option. Never forget to take the extra mile and do more due diligence. So my friend, before you accept the final offer and make the down payment, have you checked the property thoroughly? You may be surprised that you'll be required a lot of maintenance through the home ownership journey, which sometimes may be a deal breaker for your budget in the long run. Usually when someone skips inspection, they are usually trying to put in an aggressive offer where there's no contingencies and no inspection. I personally would not do that. There's too many variables, and not doing an inspection can lead to $10,000, $20,000, $30,000 of unaccounted for expenses. Of course, there are caveats if you've been doing this for a long time, etc., etc. But if this is your first property, I would definitely stay away from it. And finally, number 8, not considering resale value. Whether or not you're planning your first home to be a source of investment, evaluating a resale property is very important. During the home search process, you have to ensure the chosen property aligns with your goals. Are you flipping the property after a few years or renting it out? There are several factors to consider, like appreciation rate and days on market, or the market in general. Are you a cash flow guy or appreciation guy? Or do you like both? When you could go to a state where it's not very known for cash flow, but the appreciation is super high, but you know this little known strategy like co-living, where you can cash flow like crazy and still keep those high appreciation, because in this market of higher interest rates, you can still cash flow a lot because of this specific strategy. And if you don't know what I'm talking about, it's called co-living. It's when you rent out by the room but on steroids. I actually have a video breaking down exactly how I do it in this link down below. And there you have it, guys. Those were the 8 mistakes military homeowners should consider. I hope you learned something new today. Please comment with your key takeaway from this video in the comment section below. And by the way, if you need extra help building your military real estate empire, we have a mission called Mission 333. Our mission is to help military members get 3 rentals in 3 years and bring 3 people along the wealth journey with them. We are the only real estate investing program that specifically helps military members build real estate through our system. If you guys want more information, click the link below. Thank you guys for watching. I'll catch you next time.